Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Welcome back to Chicago Future of Finance. The story, arguably, of the year was gold and silver's big run. And with 2026 now almost a month in, it looks like it's still going. Fresh highs today for both of them, silver and gold. So let's go to one of the best commodities traders and groups that I know, Blue Line Futures, based here in Chicago, with Mr. Phil Streible joining us from Florida. Phil, great to see you again. Thanks for coming on the show.
Yeah, thanks for having me on.
Hey, this is arguably the story of 2026. You know, last year was like we could pick a lot. The AI story was great. The tariff comeback was great. The retail trader crushing the market was great. But when you take the gold and silver performance of last year and the fact that it's extending this year, it's just unbelievable. What do you make of it?
Yeah, it's incredible. I mean, we believe that gold futures could hit 5,500 in 2026, really driven by the continued central bank buying, the private investor ETF flows, and the Fed easing. We expect 2 cuts in 2026, but it's really those 2 structural drivers. The central banks, they are diversifying away from US dollars, treasuries, other currencies, and they're increasing their gold reserves. We saw that begin in 2022 between Russia and Ukraine. The average central bank holds about 20%, China only about 8%. And where we believe they want to bring that is up to 30%. So that's kind of the first thing. The second thing is that really you're getting those ETF flows, the portfolio diversification. So the traditional 60-40 portfolio, it's just dead. So they're adding strategic commodities out there, such as gold, silver, copper, at times Bitcoin and oil. Really depends on what the situation is, but adding small slices really can help not only protect somebody, but also give them the opportunity to make additional, yield from the rise of those particular commodities.
Silver making highs, gold doing the same, kind of fitting into the conversation we were just having as people are trying to figure out what to put in place of bonds for their portfolio. The fact that we got silver and gold making highs while the 10-year yield broke out certainly fits some of that narrative. But I would also say, yields have been in a downtrend for a year, and these things have been doing well too. So it kind of just feels like, I don't know, I could argue you don't even need the bond story. It's just these things are working as an additive to the portfolio regardless of what you got.
What we're seeing is that people are taking down some of, like, if you have an 80-20 portfolio, they're taking down that debt side of things down to about a 15 or 12% allocation. And then what they're adding is those small slices in there of things like gold, like miners, things that are paying dividends. Even some of the energy names out there have done really well. And it makes up for that. It gives them that income stream they're looking for, but it also gives them a little bit more diversification.
Now, when you look at the potential for, price movement, as you mentioned, you see gold trading upwards past 5K. Silver, is it as reliable? It joined a little bit late, but the move certainly was appealing to those who like a little bit more volatility. How are you thinking about gold, silver on that spectrum? Maybe we throw in Bitcoin as well, which had a weak 2025. But certainly is no stranger to volatility. It's kind of like dead in the water today and yesterday, but look, we know what it can do. We know it can be part of that volatile regime, but I wonder if silver kind of usurps this. How did those things fit on the spectrum in your mind?
Silver's really interesting because I believe that at some point you're going to see some substitution risk from the end user in silver. But as far as this price action from the $50 to $95, 50 before, that was the old ceiling. We broke through it, and it seems like it's just a perfect storm here where prices could drive up into the triple digits, and it could potentially happen tonight. Futures got up to 96.74. They're only a few dollars away from here. So if we repeat today's price action, I wouldn't be surprised to see $100 overnight. It's really the multi-year supply deficit, the booming industrial demand, especially EVs, AI, solar, the rising investment demand as geopolitical risks, the dollar weakening a bit. It creates that perfect storm where the demand really outpaces the supply and it pushes things up to record prices. Now, could prices pull back? Some pullback is definitely reasonable given these rapid price gains, but the fundamental underpinnings of the metal are really remaining in place. So we believe that any kind of dip would be shallow and be bought up.
Okay. So until otherwise noted, trend looks good. What about for coins? Should crypto folks be worried that this thing has been range bound while there's so much action elsewhere?
So tough. It was building a base here in like early January, and then it shot up to about 98,000. Now we're getting this breakdown in that market again. We had a lot of leveraged unwinding. I was reading about $1 billion worth of positions of leveraged longs across various crypto exchanges were mechanically accelerated as far as the down move because of the fact they were forced liquidations being automatically sold off. So you do have some institutional slowdown. People are saying like, hey, I want to allocate. Remember when it was going up to like 125, people are like, I want to have a 10%, 2%, 5% allocation towards Bitcoin. And now that's being chopped in half, and it's probably being substituted out for some of these metals like copper, gold, silver, things like that.
I think it's a fair point because it's just, again, it's what role does it play? And the more murky it is on figuring out what that is, even the fact that, it used to be the pure risk where stocks are making highs, you can assume that Bitcoin's doing the same. But a year in which that doesn't happen, you start to question one of the most reliable things. It's like, it's fine if it's a thing that you use for additional beta. But when that becomes even in question, where stocks are, disconnecting a bit to the upside, it's hard to figure out kind of what the appeal is. Maybe it's just kind of a random chance thing, but I would think that while there's speculative appetite in silver and gold and commodities and plenty of stocks, that Bitcoin's probably going to be able to at least hold this range. Like, I don't think it's a bearish chart necessarily in the near term.
I don't think so either. I mean, if as long as it can hold some of the key levels, and I think what you really want to do is broaden and start to look out. Like, look at Ethereum. That's got more fundamental uses, things like that from a platform standpoint. So if you start to see Ethereum hold some of these levels, start to push up again, Bitcoin will probably be the one that quickly snaps back as investors go into that. XRP is another one that it seems to have these quick upward movements, then back down as well. So there is some volatility there. It's just that one's just got to be put on the back burner at the moment. Again, like copper and things like that, there's too many better choices out there than to park your money in something like Bitcoin.
Fair enough. Phil, I want to get your thought on WTI, crude oil down 2%. A chart that just still seems like it is a sell rallies type of thing. I've had this line on here for a while. It's a pretty simple one, but it's, I don't know, am I oversimplifying, or is it just U.S. production, whenever there's a ramp, you sell it?
I have the same line drawn on my chart, and it's really since the start of 2025, futures prices were in this steady downtrend. You had one of the most insane events take place where we're dropping bombs on a nuclear facility in Iran.
Man, oil's not moving.
And futures they capitulated at $80. So that, to me, is the ceiling. You do have, Venezuela most likely going to come back online, start pumping more crude oil, getting things out there. You've got the U.S. producing a record amount. You've got global oversupply. The demand, yes, the economy is doing well, but it's more steady demand that's out there. And that supply is continuing to create this market surplus. And we expect that in the first half of 2026. So OPEC has also shifted their strategy where they're willing to tolerate lower prices, but they're going to throttle more. They're selling more pizza slices at that lower price, and that's where they're gathering that market share. And what it's doing here is it's just keeping this market well flooded with oil. So I believe that, yes, we had a little bit of a rally here, some geopolitical tensions, but it seems like the current administration is able to temper some of these fears, and prices should be back between $50 and $55, I think, in no time.
Okay. So maybe try it for a short here for $9 maybe?
I think so. But remember, when you're picking tops, you're picking bottoms, it all comes down to risk to reward. You've got to have a stop loss in place. You've got to, plan your trade your plan, either look at a calculated risk put spread a short futures with a stop over the high or something like that, something covered. You really don't want to leave yourself open-ended because of the fact that things can quickly deteriorate quickly as far as the geopolitical concerns.
I'm kind of thinking maybe this whole Greenland thing might be like the funniest geopolitical sell-off yet. You know, the memes are good. The memes are great. We got like, winter is coming, Game of Thrones memes. We got Marco Rubio wearing Han Solo, on the ice planet stuff. Like, the memes are good. But in my mind, it's just if some of the things that we've been through, like to your point, massive global conflict in a lot of places, maybe not U.S.-centric, but things that we keep shrugging off. I get that it's not good that to be, kind of being, confrontational with Europe, our closest allies. Like, I get why that can freak people out, but it's Greenland. Also, like when we see the data that keeps coming out, U.S. has continued to leapfrog the rest of the world since COVID. We've innovated all the best tech that's powering all the global innovation, essentially. We're pumping all the crude oil now to try and keep energy prices down to help keep inflation down. I'm thinking maybe we deserve Greenland, and if we don't, then who cares? Like either way,
Yeah, I mean, from a strategic standpoint, I see it makes sense, and also developing some of those rare earth elements and things like that. We've got to get more diversification from, relying just specifically on China for some of these rare earth elements. And a lot of these different countries and nations out there, they have the elements that are there. They just don't have the infrastructure to bring them to the surface. And that's why we've formed some strategic partnerships with countries like Australia, countries like Canada, and then looking at things like Greenland. Greenland will give us a great advantage as far as maybe taking down some of these geopolitical risks because of the fact that we'll have bases around there. And I think that Europe should find some comfort in that. When President Trump says things like, we're going to take Greenland and stuff like that, people envision a worst case scenario there, but he's often the guy who comes out and he just says things off the cuff, they get misinterpreted, and then he dials it in. And it was really, we just need to have some locations there. And I think that it'll help alleviate some of the geopolitical tensions and concerns.
That's fair. I can get some of that argument. I'm kind of like in the camp where, like, in terms of the things that matter for the S&P 500, I still think the argument is that it's fairly low. Now, I try not to be like totally myopic, the guy who doesn't care about anything unless it can break the market cap weighted U.S. stocks, but that's also kind of like my job a little bit. So when I think about kind of the ranking of things, I look at the semiconductors that are strong. I look at the innovation that's still happening, productivity going up, and all of these things suggest to me that it's going to take a lot more to break this market, especially when we had fairly shocking tariff announcements earlier in the year, and that couldn't even break the market. So, it's just try to fade on the Greenland stuff at your own risk is kind of my point.
April was a bit more sticky as far as working through that, because it was the first time we've seen the tariffs and how aggressive they were, 150%.
And numbers that were way above expectations, right? There was a big element of surprise there.
Yeah, in the volatility index continuing to surge higher, where what we've seen now is that since then it's been mostly like episodic and non-trending events that have occurred, and it's resulted in buy the dip mentality, forward looking here. Yes, AI, the NASDAQ got a bit ahead of itself. You saw earnings growth. It peaked in late 2023 as far as the Mag 7 and has rolled over, since October of 2025. So traders have rotated out of many of those consensus names on valuation concerns. There are some smaller cap, micro caps, things like that within the tech sector, AI plays that are creating some alpha. But the rotation's really been into the Russell 2000, which I believe only a couple hundred points away. This thing should be called the Russell 3000, because I think that's where we're going. It's going to be, the declining.
I like that.
The declining interest rates, the strong U.S. economic growth, the improving credit conditions, historically attractive valuations in comparison to the large cap dominance that we've seen. So I just think that Russell is there. There's probably too many people that are still short that. And if you start pulling small businesses, I mean, look at guys like, look at Blue Line Futures. Look at your, what you've developed and things.
AI,
These small
baby, high productivity, you know?
Yeah.
Small business getting up off the ground and running. I love it. The Russell 3K. Phil, you the man. Great to catch up. We got to jump. We got the great Mr. Scott Bauer on deck. Thank you, Phil. Always good talking commodities in particular. You guys are all over that. Love it. Chief Market Strategist at Blue Line Futures.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material, used and distributed by Blue Line Futures LLC, shall be construed as or in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.